Imagine watching your hard-earned money vanish before your eyes. The market's crashing. Every expert is screaming sell, and that gut feeling, it's screaming louder. Most investors panic, they bail, they lock in devastating losses because they don't know this one ancient secret that can not only protect your wealth, but potentially multiply it. Sound familiar? That feeling of being trapped, of making the safe decision only to watch opportunity explode without you? I've been there. We all have. But what if I told you there's a way to navigate this chaos, not with frantic action, but with unwavering inner strength? In the next few minutes, I'm going to reveal how a powerful philosophy, one that's thousands of years old, can completely transform the way that you invest and build lasting wealth. Hi, I'm Jay, and for over a year now, I've been guiding students at the Financial Freedom Academy to break free from the emotional roller coaster of trading and investing. For years, I've been teaching others how to build a solid foundation for their financial future, even in the most volatile markets. One of the biggest obstacles I see time and time again is emotional decision making. That knee-jerk reaction to fear and greed sabotages even the most well-researched strategies. I'm going to reveal to you about one of my friend's biggest mistakes, a bright, diligent entrepreneur who invested $1 million. He did his homework, understood the potential of a promising tech stock, and bought it with a long-term perspective. Everything was going well until a major market correction hit. The news was terrifying. Headlines screamed of impending doom. His friends were selling. Then that primal fear kicked in. Despite his initial plan, despite underlying strength of the company, he panicked and sold everything at a significant loss. A few months later, that same stock had not only recovered, but had soared to new heights. He was devastated. The emotional pain of that missed opportunity was far greater than the financial loss itself. His story isn't unique. It highlights the core problem that we often let our emotions, our fleeting gut feelings override our rational strategies, costing us dearly. Have you ever felt that gut-wrenching regret of selling too early? If you have, share your story in the comments below. In this video, I'm going to show you how to avoid this man's fate and how he actually learned from this lesson to make a fortune in the stock market. You'll learn the timeless wisdom of Stoicism and how to apply it directly to your investment journey. Now, these aren't just abstract philosophical concepts. They are practical tools that can shield you from the emotional pitfalls and empower you to make sound wealth-building decisions. Here's what we'll cover. First, we'll dive deep into the crucial difference between trading for validation and investing with a clear vision. Second, we'll explore how to transform the sting of regret into valuable lessons for future success. And finally, we'll uncover the power of partial action and why the all or nothing thinking can be your greatest enemy. Stick with me and you'll walk away with a powerful new framework for navigating the world of finance. Let's dive into our first key lesson. Don't trade for validation, trade with a vision. Think back to my friend's story at the beginning. He reacted to the immediate pain of those red candles, seeking validation in cutting his losses. His gut told him, get out, and he listened only to be punished by the next rally. Now, the Stoics teach us that external validation is fleeting and unreliable. Epictetus wisely said, it is not things themselves that disturb man, but their judgment about these things. As investors, we often fall into that trap of needing the market to immediately confirm our decisions. We feel good when we see green and terrible when we see red. But the Stoic investor understands that short-term market fluctuations are just noise. Your focus should be on your long-term vision, your carefully researched strategy, and your risk tolerance. Are you investing for retirement in 20 years? Well, then a short-term dip shouldn't derail your plan. Your why, your financial goals, should be your guiding star, not the daily ups and downs of the market. This wasn't always easy for me. Early in my stock and crypto journey, I remember investing in a project that I truly believed in. I had done my research, understood the fundamentals, and had a clear long-term vision. But when the price started to fall, after a few weeks, doubt crept in, Online social media was filled with negativity. My friends were questioning my judgment. That gut feeling started to whisper, maybe you were wrong. I almost sold. I was seeking that external validation, wanting that immediate relief of not being wrong in the short term. But something held me back. My initial vision. I reminded myself why I invested in the first place. I stuck to my plan, and over the next year, that investment grew exponentially. Now, that experience taught me a powerful lesson. True conviction comes from within, rooted in your own research and long-term goals, not the fleeting opinions of others. Our second key lesson, regret is a teacher, not a sentence. Remember my friend who sold right before the rally? The overwhelming emotion he felt was regret. Why didn't I wait? I should have held on. Now, this is a natural human emotion, but the Stoic investor refuses to be paralyzed by it. Seneca wisely said, every new beginning comes from some other beginning's end. Missing a pump, selling too early, these are learning opportunities. Instead of dwelling on what could have been, the Stoic investor asks, what can I learn from this? Did I misread the market signals? Was my risk tolerance too low? Did I deviate from my strategy? The goal isn't to be perfect, it's to learn and adapt. Regret, when processed constructively, becomes a powerful teacher, guiding us towards better decisions in the future. It's not a life sentence to the sidelines. Now, speaking of future decisions, this next principle is crucial for navigating market uncertainty. The final key lesson is partial action is still action. You see, my friend, he had to be either fully in the market or completely out. This all or nothing thinking is a common trap. The Stoics understood the power of moderation and flexibility. As investors, we don't always need to make extreme decisions. Sometimes the wisest move is in the middle ground. Instead of selling your entire position during a downturn, consider selling a portion to reduce risk while still maintaining exposure to the potential upside. Instead of investing all your capital into a surging asset, consider scaling in gradually, hedging your bets, using stop-loss orders. These are all forms of partial actions that can allow you to manage risk and stay flexible in the face of uncertainty. Think of it like navigating a storm. You don't necessarily abandon the ship entirely. You adjust your sails, secure the cargo, and ride it out strategically. So let's quickly recap the 3 powerful Stoic lessons we've uncovered today. First, remember to trade with a vision, not for validation. Your long-term goals should always guide your decisions, not the short-term noise of the market. Second, understand that regret is a teacher, not a sentence. Learn from your missed opportunities and use them to refine your strategy. And finally, embrace the power of partial action. You don't always have to go all in or out. Often, the wisest move lies in finding a balanced approach. Now, I want you to put these principles into practice. Here's an exercise for you. Reflect on a past investment decision where your emotions got the better of you. Write down, number 1, what was the situation? Number 2, what emotions drove your decision? And number 3, looking back, how could applying these 3 Stoic lessons have led to a different outcome? Share your insights in the comments below. I personally read every comment, and your experience could be incredibly valuable to your health, wealth, and success.